What's up, everybody? Trader Tim from E-Mini Mind, bringing you another Monday market analysis video. Today is Monday, June 6th, 2015. I hope everyone had a great holiday weekend. If you're in the United States celebrating Independence Day, lots going on in the markets and a lot to talk about. Last week, I did a webinar on market internals. I should have that archived shortly, just waiting on Infinity to push that through. So yeah, let's jump right into the ES. The Euro's been looking really good on the 512 tick chart, but let's start over here with the ES. I'm going to put on no, actually, I'll leave extended trading hours so we can see this this move here. So obviously, in the last video, we talked about some different scenarios coming down to this 2040-ish level, and obviously we have broken the trend. We've retested this 2040 level, and now it's going to be a waiting game to see if we come down and break these swing lows. Last week, the different scenarios that we were talking about, and I'll leave that video in the archive so you can take a look at it. But to kind of summarize the different scenarios at this level, so we had a big gap down on Sunday's open, and then this big bar here is today's price action. So we had the big gap down, and then we drifted higher all day long. So we immediately had buyers coming in, both in the overnight session and at the NYSE cash open. So that tells us that, hey, this 2040 level, there's still people hanging out waiting to get long. You can see back here 1, 2, 3 tests, and every single time we dip in, we've had a very strong V-shaped sharp reversal higher, meaning the buyers stepped in and pushed the market higher. Now, if we break this 2034 or 2032-ish level, basically, if we come down here and break these swing lows, and it's followed immediately by a sharp push lower, and then immediately we V reversal and start pushing higher, and possibly get a low tick for the day, then I would look for the same scenario for us to come down, break lows, kind of fake people out, have them thinking, oh no, the market's going to push a lot lower, and then get faked out, and then the buyers come in and push the market higher once again. Now we've kind of had a bear flag formation where we've had this decline here, a nice triangle formation right here, the flag, and then typically you would get this big body candle in the other direction. You would open at highs and then start breaking down each day's lows, and that would just continue to push the market lower and lower. So a little bit interesting scenario here. Again, this 2040 level still holding strong. I want to come back to this chart, but let's just take a look at the volume on the SPY. You can see these 2 days. These inside bars, meaning this large body candle here. The next 2 days, well, actually, everything since then has been inside this candle. So that's typically a bearish pattern when you get a move down and then a series of consolidation bars that are within the previous large body candle. But the volume on these little updates here was relatively strong. A big push lower, but these 3 days here did not have super strong volume, but neither did these these last reversal bars here. So nothing out of the ordinary extremely, but just a little bit different on what you would see with a true bear flag continuation of the downtrend. We would want to see big volume on the decline, little volume on the short consolidation rally, and then another big push lower. So let's just take a look at the Dow. Basically the same scenario, only we did kind of break lows. We don't have quite the same inside bar, inside candles. Whoops. There we go. As we have here, we have the big body candle, and then all the candles are trading within that. The Nasdaq and the Russell are also a little bit little bit different in that we do have some relatively increasing volume on decline and then decreasing volume on the rally. That's typically more of what you would see with a bear flag pattern. And then the Russell is actually already broken down and drifting lower. And typically the Russell kind of leads the trend when we're starting to make a new trend, or when the trend is like, let's say we're coming out of the recession. It's the Russell that kind of led the first signs of bullishness. So when we're at highs and we're looking to potentially be reversing and make a new trend downward, we're looking to the Russell to lead us lower. For volatility, still hanging out in the relatively high volatility of the upper teens, low 20s. So we'll be keeping an eye on that. You can kind of draw a line now at 1550s and call anything above that relatively high as of late, and anything below that relatively low. Typically in the summer we do see volatility in the teens, so nothing, again, out of the ordinary for this kind of market condition. So let's go to a 15-minute chart. I want to talk about a couple of ways you could have played today's price action. Now still have 24 hours worth of data showing, but you can see the gap down from Sunday night, and again right to that 2040 level. So I mean, if that's not a indication that these levels are being looked at by big institutions, prop firms, big automated trading firms, I mean, it's pretty clear. We had the gap down. We had a 15-minute trade from lows to highs, basically to the tick. And this was early in the morning. And then the next move from lows to highs. Again, this is basically the overnight session. But I like to kind of start from the left-hand side and move forward as I wake up Monday morning and start trading, so that I know what's going on and what levels I'm pulling from what's happened overnight. Now if you're just trading the first hour and a half, 2 hours of the day, you can completely block out all the other information if you're using a very small time frame. But if you're going to be trading the 15-minute chart or looking at the 15-minute levels for failures, then it's good to at least have an idea of what's going on overnight. Are we trending or are we moving sideways? So my thought process for the morning was, okay, we've come up here and we've basically filled the gap right off of the open. So we've got 8:30, and basically in the first 45 minutes we came up here and filled the gap. So I was looking for a potential kind of gap fill and then immediately reverse and take us lower. But because the 15 minutes were so clean and even pushing through the negative 23, I just drew up the next 15-minute setup and was looking for a move long at basically, so 2059 63s was the level, round up, add a tick, 2060s, and we didn't get quite there. We were a tick away, and sometimes it makes sense to drag your order in, but it's not really a good habit to get into. So rarely do I move my order once I've placed the trade. So what I will look for is a break on the 512 tick chart. And so I'm going to flip this 512 and then the Heikin-Ashi. And so as we're coming down to this next long level, rather than seeing the market come close to my order and then click my order and start dragging it higher, dragging it into the market, I'll just leave my order as it is. And then if the market does start moving away, you can come to this 512 tick chart and you can say, okay, well, here was the prior swing. You can use this guy down here, prior swing high, and once we break that, I'll just draw from lows to highs and take the first setup that occurs. And so you can kind of, using the same concept, waiting for the trend to break on the smaller time frame, that can give you an entry into the larger trend. And in this case, the opposing also held. So if you look at where we are on the 512 tick chart, this 512 tick setup can take us into the opposing short. So you could say, okay, I'm going to get long here, and then put my target at the opposing short. And then what you can do, because both really didn't trade to the tick, you can then do the exact same thing in the opposite direction and say, okay, when we break the swing low, or basically up here, the swing low, I'm going to take the first setup in the opposite direction. So if you're making a short-term play, so then you can take highs to lows, take the first 512 tick setup here, and then it's basically just, okay, I'm taking these very short-term trade setups in anticipation that we're either going to break the long or we're going to break the short. One of them has to break. And in this case, we broke the long. And then, so the 15-minute chart, we had the long setup here. That broke. And then we drifted back down to lows on the cash session. And then we closed the afternoon drifting higher again. So I'll go back to the tick chart. And you can see, looking to the 512 tick chart to get in, you're not, if you're missing an entry or if you're just not sure, there's very good reward to risk by just being patient, not dragging your order in, because a lot of times what happens is you see the market start coming close to your order, you drag it in, and then your stop, if you're using a bracket order, it stays 6 ticks, or if you're using a 6-tick stop, and you drag your order in, now instead of your order being down here, your entry, now it's, let's say, up here, and your 6-tick stop is closer to your original entry. And so now with slippage, you drag your order in, you get filled, you're excited because you feel like you're intuitive, and you've dragged the order in to getting in the market, and then the market comes down and stops you out. So I'll leave my order alone. If I don't get the entry on the 15-minute chart, then I'll look at the 512 tick chart, and then just get in, and then either take a short profit and just continue trading the 512 tick chart series, or what works better is to just trail your stop above every swing high, and at some point they'll break, but being a little bit more conservative allows for you to get in on a small time frame, but then kind of use the 15-minute target as it stands and capture a little bit more of the move. So that's kind of how I looked at today's trading. If you have more questions on the NYSE tick, I've got a lot of videos in the members area and on the blog talking about both Heikin-Ashi and the tick charts. So feel free to give me a shout if you have questions. Tim@emoneymind.com. I hope you're all having a great summer, and we'll talk to you next week.